market cap from the real estate comp and all the other industry. Market capitalization or market value of real estate. That's a tough one. Let's look. I'm going to share my screen and I'm going to show some real estate market caps. Okay. So market capitalization. So according to Zillow, the US has gained 6.9 trillion in 2021 in real estate in just 2021. What that means is that the US market has $43.4 trillion in real estate. $43.3 trillion in real estate. That is the value of the real estate market, according to Zillow. According to the National Association of Real Estate Investors Trust, REITs, the multifamily is about 2.9, office space is about 2.5, retail is about 2.4 trillion, and the total is 16 trillion in a commercial real estate investment trust, the REITs. US housing, Bloomberg says that the real estate market is about, where is it? It has gained $10 trillion during the pandemic at $43.4 trillion. Now, this one is the global real estate market is a $326 trillion in 2020. $326 trillion in real estate. And if you were investing in real estate trust, REITs, over the last, say, 20 years, this is what you would get for real estate returns. This is some indicators that you can take a look at the trends of real estate investment trusts. So this one is American, another head and shoulder on the real estate investment trust. Of course, the direction, it has not changed, still on the upside. And these are monthly indicators. And then we have another one over here. It has made its first lower low on also an uptrend. Now, if we compare this, $40 billion in real estate asset valuation, $40 billion in real estate. None of these markets are as big. I think it's 1/3 of the US economy. 1/3 of the US economy is real estate, literally 1/3. The Fed balloon is 7 trillion. The Federal Reserve balloon is literally 7 trillion. The world stock market is at 80 trillion. The entire world stock market is at 80 trillion. And US real estate assets are about 50 billion. So that's a little bit more than the entire stock market of the world. You get the idea of the importance and the value and the scale of real estate. When it crashed, everything crashed. When it's beautiful and going well, everything tends to go well as well. So that is the first one, market cap of the real estate. It's an incredibly large market. Now, how do we look at this compared to the stock market or cryptocurrency or gold, for example? So here's an example of what gold is doing in the same time frame. It had peaked back in the 2020, 2010s, and then it has crashed. And we have seen another peak recently in the stock market here. I'm sorry, in the gold market, and now it's making another crash. So the question is, has this thing performed better than the real estate? That's a good question. And if we look at Bitcoin, for example, this is Bitcoin. And Bitcoin 2018 is when it started. Boom, it shot up, went to the high of 57,000, double top, and now it has crashed below the trend line. It has crashed below the trend line. So we are now seeing more than what? 70% drop, more than 70% drop on cryptocurrency. I don't think the real estate has ever seen a drop of 70%. I don't think the real estate has ever seen a drop of 70%. This is the Federal Reserve, and here is showing you the trend of the real estate market. The real estate market, this is the trend, 1955 until 2020. And this is the crash of the real estate 2008 real estate market, the crash of the real estate market in 2008, right? So even during all of the recessions and all of the major impact, real estate has always had an uptrend, and this is it during the pandemic. So the Federal Reserve measure real estate growth, equities, mortgage debt, and just about everything that you can measure. And you can get this report from the Federal Reserve. This is the Federal Reserve of St. Louis. You can get all of these reports just by clicking and seeing the loan, residential, equities, commercial, all the interest and indexes and things of that nature. And if you click on it, you'll see everything that I'm looking at. So when you look at these things, you can get a good idea. You can get a clear idea of the performance of the real estate market as a whole and their valuation. So if I can stop for a second and say, it's important to understand the market value of it, but there are other things that you can do when you're looking at the real estate market that is different than other markets. The first thing is that even though you're gaining so much equity over the long term investing in real estate, you're doing that at a fraction. What I mean by that is that most people do not purchase real estate by paying cash for that property. They leverage it. So if I'm looking at $1 million property, whether it's a residential or non-occupant or investments or rental or any other activity or purposes that I'm buying that property for, the idea is that I'm going to be buying that property using leverage. So a commercial transaction might require me to put 20% down. On $1 million, that's $200,000. And if we look at the trend of what we just saw, if I had purchased $1 million property back in 1955 or back in 2000 or 2010, looking at that trajectory, that chart that we just saw, real estate has been performing awesome, and it would double or triple my value of my property in just an exchange of the 20% down payment. So I could have seen a $2 or $3 million return on my asset based on the down payment of $200,000. That $200,000 allowed me to control 80% more than what I'm putting. I'm putting 20%, allowed me to control 80% of that asset. Then, if it's an investment property, that asset is now being provided to someone else in exchange for a payment similar to dividends. And that payment goes to reduce the principal or the debt, increase my principal, build my equity, which would allow me to be much, much wealthier. As my debt is being paid, my equity is growing and the value of the property is growing even further. That's the beautiful thing about real estate. And if there's a cash flow or a profit after the debt service is covered, that is also an additional benefit in real estate. So I wanted to show you those graphs to illustrate that when you're looking at a scenario like the one we just did, if I was investing in cryptocurrency and I put my money in the cryptocurrency at 11,469, And in a span of 1 to 2 years, it reached $60,000. If I did not liquidate my asset today, when it dropped to $19,000, I would have made a mere, a very small percentage. And that small percentage would come with zero cash flow. And if I leveraged my acquisition at this position and it went up, when it crashed 70%, I would be kicked out, or I would have received a margin call. That's the disadvantage of comparing some of these crypto or stock or other assets. Now, when I'm looking at a real estate chart similar to the Fed Reserve calculations, this is for commercial real estate. Let me look at some household equities. And when I'm looking at these scenarios, even if I bought property at the same time frame around 2011, or I bought it at 2020 or 2019, just trying to find it. 2020, this is the beginning of pandemic, 20 trillion all the way to 29 trillion. There's no pullback. There's no drop in the market. There is not a single drop in the market. So if I had bought a property at $10 million, it would be worth $15 million today in a span of roughly 2 years with no pullback, no correction of price. But even if there is a correction of price, unlike the stock market, unlike cryptocurrency, unlike other assets like bonds or whatever, this one will be paying me a return or a dividend or rent that should be, under normal circumstance, cash flow positive. So I would make sure that the rent for that property was sufficient to pay for my debt service coverage, my mortgage payment, and then after the expenses, I would make a profit on that investment. As it's growing from 10 million to 15 million, not only am I now getting $5 million equity, but I'm also benefiting from the cash flow of that property. And my $10 million mortgage, or my $8 million mortgage because of my $2 million down payment, my $8 million mortgage is now being paid down by the tenant. It's being paid down by the tenant. So I am seeing a triple effect on my wealth, unlike other assets. Now, the last thing that it provides that other assets do not provide is a tax benefit of it. That's the reason why real estate is much more appealing for the long term on investment than any other assets, in my opinion. Again, I am not an attorney, I'm not a financial advisor, I'm not a CPA or anything like that. This is just my opinion. And that's the reason why I prefer real estate.